It's Monday, September 30th, and this is Markets Daily, hosted by me, Jen Sanasi. As you know, on this show, we navigate the currents shaping the crypto markets, providing insight against the broader financial landscape. So, whether you are actively trading or simply fascinated by the volatility, by the craziness that is the crypto markets, this show is your compass to understanding what's happened, where we are, and where we are going. Good morning, everyone. Happy Monday. Joining today's show is the head of investment research at Sygnum Bank, Katalin Tischhauser. Katalin, welcome to the show.
Thank you so much for having me.
Of course, now, on this show, we talk about everything impacting the crypto markets. So let's just start out very broad. It is Monday morning today. What are you watching?
Yeah, so, obviously the markets have been quite strong since the US rate cut and then the Chinese stimulus package. And today we're seeing a reversal based on basically what happened in Japan. I think this is less significant. The US and China are the world's two largest, most important economies. And the Fed and the PBOC, the two most important central banks, and they're both going in the same direction, which is different from the direction the Japanese central bank may be taking. They already raised a quarter basis points in August. So it's not just speculation that they may be starting down this path of policy change, but still, I think today's market is maybe reading a little bit too much into, as far as the global markets. Obviously in Japan, it's very significant what's happening to the domestic market, but in terms of the crypto markets and global markets, maybe going too far with correlating with the Nikkei today. I think we don't know yet how quickly the Japanese central bank is going to progress down this path, whether they hold, whether they'll be very cautious, and also the new prime minister called a snap election, right? So for actually next month, so it could be that he will only be prime minister for a few weeks. In which case everything could change. But taking a step back from Japan, I think the big picture is still that the US and China are injecting a lot of liquidity into financial markets. And this is likely to drive up asset prices. This is the base case is bullish for all financial assets.
Well, you mentioned a few different things that I want to dig a little bit deeper into there. The first is that maybe we are putting too much stock, no pun intended, into what's going on in Japan as it relates to the crypto markets. Tell me a little bit more about that. Do you think that market watchers are maybe focusing on watching macro factors that don't really affect the crypto markets?
So I think it's, I think basically the global liquidity conditions are relevant, and they are very bullish for crypto because, they would always be for all assets, but especially for crypto, when a lot of these institutions are looking to potentially allocate. Since the Bitcoin spot ETFs were launched, a lot of apparently very large institutions, sovereign wealth funds, and so on, insurers, very conservative traditional institutions are considering making an investment. A couple of pension funds have made an investment, but apparently the pipeline, this is what we hear from, for example, from institutions like BlackRock, the world's largest asset manager, who are in touch with these institutions, and they report that there are a lot of due diligence processes going on, and these institutions are completing their approval processes and considering making an investment. So when a lot of institutions and potentially large pools of money are in this space, then the easier availability of liquidity can really give that a turbocharge, right? It makes it facilitates it, it makes it easy for them to actually pull the trigger that they've been considering pulling. So when we look at the big picture, we still see that from the two largest economies, a lot of liquidity is coming. And even though the Japanese policy change can have far-reaching implications potentially, across reverberations across the world economy. When we balance it out against what we see in the US and China, and also the fact that how much the Japanese central bank will do and how quickly, that is really not at all in the bag yet. So there's a lot of uncertainty, and it could turn out to be a lot more benign than people's worst fears. So I think today the markets are focusing on it, but they could quite easily, if nothing much happens in the coming days, the market could quite easily be goldfish about it and just move on.
We talk a lot on the show about macro factors in the US, but we don't often talk about China. I mean, we do, just definitely not as much as we talk about what's going on in the US. And so I'd love to dive into what's happening in China and what crypto investors should be watching as they're looking to allocate their portfolios.
Yeah, so definitely the stimulus package was a surprise. I think people could say maybe the 50 basis point US cut was also a surprise, maybe prior to a week ago, but in the days coming up to it, I guess increasingly discounted. But in China, you can say this was a surprise. And the markets obviously rightly reacted. I think the messaging before from China was that this would not be on the cards. And it is significant because China has been basically the biggest driver of the world economy for some time now. So basically, a stimulus package in China is bullish for the world economy and is bullish for global markets. It is bullish for crypto only by extension. So it is bullish for crypto because of its impact on global liquidity conditions and the global economy and global markets. I think China, since the crypto ban, has not been as significant, specifically directly. Chinese policy decisions have not impacted the crypto market so directly. There is crypto trading obviously still taking place in China, but it declined dramatically after the ban. So the impact is more indirect than direct.
All right, talk to me about what we can expect heading in to October. The first day of October is tomorrow. It is historically more friendly towards Bitcoin. What are you expecting to see next month as we head to the end of the year?
The seasonality has been very, very strong in crypto. So there is this expectation that Q4 generally should be a good quarter. And we have so many tailwinds. Basically, we have the macro backdrop, but then we also have this against the underperformance of crypto since March. So whilst global markets, the S&P and various risk assets spent the last 6 months gradually pricing in the start of the rate cut cycle, the crypto market has not done that. The crypto market, in fact, peaked in March, and since then it's been down and sideways, and it's been basically a prolonged consolidation correction period, not pricing in any of that. Actually, I checked, the Dow Jones made 32 all-time highs this year, and Bitcoin made only 3, and the crypto market none, the overall market. So there is a lot of catching up potentially to do. And especially because there have been a lot of positive developments inside the crypto market, which basically the market has not priced in. And the reason why, one big reason why the crypto market has been so depressed was supply. For example, the German government's sudden sale of 50,000 Bitcoin and the Mt. Gox distributions, Genesis bankruptcy exchange. So, and a lot of this is behind us. So a lot of this was, for example, the German government selling, once it's done, and the market absorbed it, and now we can move on. And that doesn't have an impact that carries on into the future. And in fact, we're having now the opposite impact from bankruptcy distributions, because the FTX estate is starting to distribute, but this is in cash, not in kind. And a lot of the people who receive this cash are crypto investors, some of them crypto hedge funds, and so on. And a good portion of this cash is likely to be reinvested into the market when people receive it. So that's kind of now on what has been holding the market back, that's kind of turning actually in the opposite direction. And in terms of the positive developments that haven't been discounted, we have seen so much movement in terms of the shifting political attitudes to crypto in the US. And the market absolutely has not priced these positive developments. I mean, now we can even see, initially it was seen as a Trump trade, and now it's not even that. So now we have seen that, in my opinion, the Harris campaign has managed this very well without causing any aggravation with sort of members of the Democratic Party who are against crypto, and basically very skillfully communicating ultimately a supportive message, and basically saying, of course we want to support the growth industry, of course we want to support innovation in the United States, we just want to do it in a regulated, safe manner, which is something the crypto industry agrees with as well. And I think if they can keep on this path, it actually it can make the haters of crypto actually sound quite unreasonable.
Katalin, I gotta ask you. Many people have come on this show in weeks prior and have said that crypto, or Bitcoin more specifically, is still a Trump trade. And the Harris campaign, I know they recently came out in support of digital assets and said that they would like to see it done in a regulated way, like you just said. We had a guest on the show recently that said that they didn't really buy that, and that the Harris administration wouldn't be conducive to the progression of crypto in the United States. I'd love to get your comments, your reaction, and maybe even your rebuttal argument to that comment.
Yeah, actually, thank you for asking that. And I think basically campaign promises one shouldn't read too much into it. A lot of it is basically performing for constituencies, posturing to audiences. It has to be the case. So I would not take it very seriously what one candidate or another candidate said, and basically assume that they said this and therefore this is what they are going to do. I would rather, and I applied that actually to the Republicans as well, and to Trump as well. We have to take campaign promises for what they are, and nothing is in the bag. There could be all sorts of reasons why things actually don't go that way, even if, for example, Trump is elected and basically he would be able to implement all the things that he said he was going to on day one. Maybe he won't be able to, right? But when I zoom out a little bit, I actually look at what actually is already happening, and we are already seeing a shift. So, and I started mentioning the Ethereum ETF approval came as a surprise, the bipartisan support for bills. Then we saw the SEC dropping the investigation into Ethereum 2.0, closing that investigation with no action, sending out a couple of no action letters, ending a couple of lawsuits against Paxos, Stacks, a couple of them. Then, for example, in the recent eToro settlement, mentioning that eToro can continue trading Bitcoin Cash, and Ether. So that's basically another point of walking away from suggesting that Ether is a security. And if it isn't, then all the other proof of stake blockchain tokens are also not, right? Because they're identical to Ethereum in that regard. And we have seen a number of these developments. In fact, even in the Binance case, there was a filing recently where the SEC apologized for the confusion they caused by using the term that crypto assets are securities, and they basically backtracked and said they would not use this term, and their assertion is not that that's exactly what they meant. It was just a shorthand term. So we have actually seen a lot of movement, and I interpret this as basically a shift in the trajectory and in the landscape that is independent of candidates, and it's independent of candidates' policies. I think it is more important which way the trajectory is headed fundamentally than the candidates who are currently the faces of it, and who have to make campaign statements that basically appeal to their to their constituents. Because I would agree with that statement, but I would apply it to Trump as well, that, they might make very pro-crypto statements to court the very significant financial support that they can get from the crypto industry. So we have to take that into account. But when we watch what's actually been happening and what is already happening, that's heading in a clearly positive direction. And even, for example, this crypto for Harris events, and Chuck Schumer said we're going to get crypto regulation done this year. Now, they may or may not, but for somebody as prominent as Chuck Schumer to make such a statement from the Democrat side, these are very, very significant developments, and these don't hinge on the election of Harris or Trump.
Hey everyone, did you know 52 million Americans own cryptocurrencies? That's not just a number, it's a movement, economic, social, and political. Decentralized finance, blockchain, and digital currencies are more than buzzwords, they are the future. This November, it's on us to show up and step up. We need to protect crypto to ensure it continues to fuel innovation and freedom for our families and businesses. Don't let this opportunity slip by. The future of crypto is on the line. Make your voice heard this November and pledge to vote now at standwithcrypto.org/pledge. Yeah, we'll just have to wait and see what happens. Like I said, it's October tomorrow. I can't believe it. November is just around the corner. And we'll see what happens with the elections in the US and how the markets react. Now, as we wrap up the show, I want to talk a little bit about price action for both Bitcoin and Ether. I know that your colleague, Lucas Schweiger, wrote for CoinDesk recently, and he said that although Ether's price is falling, its liquid supply is shrinking. He said that if demand picks up in Q4, we could see a supply crunch that pushes prices higher. Curious to get your thoughts there. Could we see an Ether rally in Q4?
I think it's quite possible. And usually when sentiment is as negative as it is on Ethereum, and has been so for so long as it has been for Ethereum, it's been 2 years now, over 2 years, that basically sentiment has been ever so negative. Over this period, over the last 2 years, Ether has underperformed Bitcoin by 50% and Solana by almost 200%. And that's even, I'm cutting out the dip in Solana post FTX and the recovery kind of, taking the date from before that. So that's quite significant underperformance. And at this point, all the bad news is priced in. Basically, this is what I would say. And there's also the supply effects that my colleagues wrote about. But in addition to that, in terms of sentiment, the bad news is really in the price of Ethereum. The sentiment almost couldn't be worse. And for Solana, the situation is kind of the opposite. The sentiment is so bullish and so positive, and to some extent for good reason. Solana has made incredible progress. And basically they surpassed all the other blockchains bar Ethereum. So basically, they didn't just recover, they put themselves in a position where they're clearly the number one after, or the number two. So the number one challenger to Ethereum. And on the various market share metrics, they sort of they pulled past all the other chains that have been in number two, number three positions.
Okay, last question, and it's got to be quick because we got to wrap up. But I had 10x founder Marcus Thielen on the show recently, and he said that we could hit an all-time high for Bitcoin during the period of October to March. Curious if you agree or disagree, although it sounds like you might agree given our conversation.
There's always footnotes that there are other possible scenarios, but my base case is that we're going in that direction. And I think what can turbocharge the crypto market is the underperformance, the fact that a lot of good news hasn't been priced in the last 6 months, and also with these liquidity conditions and the more a more bullish sentiment for crypto, it could be the trigger for actually quite a lot of institutions to now pull the trigger on the Bitcoin ETF allocation. And, we have seen that at the beginning of the year, that it causes a demand shock where quite a lot of money is trying to buy these ETFs. There isn't that much supply in Bitcoin, so it very quickly causes a demand shock. And that's all it takes to go past the all-time high.
Katalin, thank you so much for joining Markets Daily today and providing that insight.
Thank you.
And thank you to our audience for watching and listening. As you know, we will continue to watch the crypto markets and keep you updated with all the information and alpha you need to make the best decisions. As always, this is not financial advice, but if you love watching the show or listening to the show, subscribe to the CoinDesk Podcast Network. That is available on all podcast platforms, and subscribe to our YouTube channel. Give us a thumbs up, leave us a comment. We read them. It can be good or bad, but we prefer good. Thank you so much for watching, and we will see you tomorrow.